From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming September 12th Forex session in the Euro US dollar. A couple things going on in this pair, as well as fundamentally around the markets as well, and I'll try to go through them as quickly as possible and explain the analysis in succinct order. The pair obviously had a very strong session on Tuesday. You can see the Wednesday candle is just now starting to form as I'm recording this just after the flip for GMT, but you can see that we broke above what would have been significant resistance at the 128 handle, and just as importantly, the 61.8 Fibonacci retracement from the fall that started all of this. In other words, we have broken at least two forms of resistance. Now, looking at this, we have to ask why. Does it make sense? Is it a feasible trade? And the answer is yes, because we have the FMOC minutes on Thursday. We also have the German High Court ruling on the constitutionality of the ESM, and that is expected to go in the way of the Euro positive type of reaction. So we think that the Germans will go ahead and acknowledge that it is constitutional. After all, they haven't really fought anything so far, so there's been a lot of lip service paid, but truthfully the Germans have pushed this all through. Now, what's interesting is, and I will zoom way out to demonstrate this for a moment, we now are in an area that we have broken above this obvious resistance, and there's really not much between here and 130. And the reason 130 is interesting is because that was the descending triangle that sent us down to begin with. So once we get to 130, I do suspect there will be quite a bit of resistance. And full disclosure, I've been very bearish of the euro, and quite frankly, I've been very leery about going long at this point. I still am to a point, but obviously there's an air pocket here. So 130 looks like a shorter term trade. The question then becomes, what happens at 130? I think that's probably just enough time for people to start focusing on problems in the Eurozone again. This market has been like that. Quite frankly, we focus on trouble in the United States for a couple weeks, we focus on trouble in Europe for a couple weeks, and we just go back and forth, and that's essentially what I'm thinking will happen. Of course, I want to see some type of bearish action at 130 to short it, but in the meantime, there's really no reason not to be long this pair now, even though fundamentally, at least I can give you 100 reasons. So having said that, it looks like it's a short for the short term, and then or a long for the short term, and then a short for the longer term once we get up to 130 and get some type of candle like a shooting star or something that confirms my suspicions. You never know, we could keep going straight, so of course, or straight out, so of course we want to see some type of resistive action. But in the short term, it looks like going long, maybe for the next 150 pips or so, is probably going to be the way we go, because 128 does look like it will be supportive now. A little air pocket that we can fill, and then it's a matter of seeing what happens when we get to 130, and that will be the tell for the intermediate term. That'll probably be a bigger move no matter what happens, if up or down. That's probably going to be more interesting, but we do have an air pocket that could be filled in the short term, so by all means I will be long for the first time in quite some time in the euro dollar.